Is being recorded for the week starting Monday, July 3rd, 2023. Thank you so much for tuning in. Hope you guys had a great weekend. If you haven't already, please click that subscribe button, smash it, or tap it lightly, gently, whatever. I'd really appreciate it. Now, getting into the video. So we have a holiday week. Things will probably be a little quiet. But with that said, I think that precious metals, I think the odds favor a bottom. It's something I talked about in the last video, that the miners were shaping up for some kind of a low. And then at the same time, metals didn't really look quite as bullish. And so there was a little uncertainty to that call. But at the end of last week, it's clear to me that the odds now favor upside, or at least the path of least resistance is higher. And so getting into it, it's something I've tweeted about, talked about in my premium update. And I did a couple interviews last week, the middle of last week, and even mentioned thinking that gold was going to lose 1900, end of the month, end of the quarter, like a real opportune time for the bears to flush it down below 1900. So look, Thursday you have a bullish hammer here. Even on Wednesday, you had a bullish hammer. Another one on Thursday, right at 1900 support here. Then, nice move on Friday. Not the biggest move, but still, that's a bullish candle. A little bit of a hammer to it. So, you have this nice hammer action the last half of the week. And I mentioned 1900 support last week, although I talked about 1860 being a more important support level, or at least a stronger one. But nevertheless, we do have this nice bottom here at 1900. And more or less, this is the 150-day moving average. If you're looking at a weekly chart, gold held above this moving average. It still did. It basically never really closed below it. So we'll see if gold can trade up here to, I think 1950 is a good bet. But I also think, if this is a short-term bottom, maybe gold, this is the next major resistance level, call it 1980, 1990. This right here. Again, we're looking at the daily chart. And looking at silver, silver holding above the 200-day moving average here. Positive divergence in silver. You can see positive divergence there versus gold. That's a good sign. Now, the macro is changing. I'll get into that in another video. It looks like the macro could be changing. But, because of the macro and also because of what's gone on here in the short term, silver could outperform gold. And here you have gold divided by silver. I'm not a big fan of trend lines, but, maybe if the gold-silver ratio, almost at 84 last week, maybe that will break this and come back, down here into the 70s at some point in the next month or two. But, one thing, gold holding above the 150-day moving average, the last thing I want to mention here, I've talked about this in past videos, and I was looking at corrections in bull markets in gold, like looking at the first year or so, give or take some months. Where does gold normally correct to? You see it correct to the 50-day, 150-day, and also 100-day. Okay, I skipped the order there. But if the market's running really hot, it falls down to the 50-day moving average, and then it keeps running immediately. But, corrections down to the 150-day moving average, after we had this bottom at the end of last week, I started looking at this for my premium update. And I looked at these moves, and, before the breakout in late 1978, before the breakout in 2009, before the 2019 breakout, all those three important breakouts, gold at some point before those came down and tested its 150-day moving average. So, obviously we know how significant, 2050, 2100. So, we'll see. We'll see if gold is able to repeat that. If this low holds up over the next few months, and, we see gold trending up like this, at that point, it looks like the market's going to break out. What a change from a couple days ago. But I think I'm getting ahead of myself. Last thing on silver, this is the initial resistance here, 2450. Then you have 26. It never made a weekly close above 26 recently. So getting into the miners here, you can see GDX here bounce at the 200-day, mini double bottom, nice bounce here. On the weekly chart, there's a bullish hammer because you started the week down, boom. Then you have nice, strong. I mean, these are really bullish candles when you see these. And it also occurred in GDXJ and Silge. And so, going down to Silge here, this is, potentially a bit of a false breakdown here. We'll see if this can slingshot. If this move continues here, maybe it can slingshot back up to the 200-day in the 10s. And for GDXJ, there was really good support at 35, also some support at 34 where it bottomed. And so, also that 35 was support. I mentioned it. And so that, could also be a false breakdown. Near-term resistance, I mean, this, if it has a bit of legs, it can continue up to 38. I mean, there's some resistance here, little resistance here. But for the most part, low 38s here. That's going to be the resistance. That's where this red line is. For GDX, the resistance is, it looks like, 32 or in the 31s. If I'm looking here, 31.75, just below 32. And then you have some at 33. But again, if these lows hold, I mean, you have this. I mean, this is a higher low. These are higher lows. These are higher lows. That's bullish. These are higher highs. That's bullish. So I'm not saying miners are going to zoom much higher here, but time will tell. But this could be a very significant higher low. We'll see. I mean, I think the macro will play a big role, and that's why it's going to be really exciting to see what happens over the coming weeks and to see if, again, I'm going to do a video on this, but if we get some kind of, rise in inflation expectations, and again, I'm going to do a full video on this, but, if money starts moving away from the stock market rally and morphs into a commodity rally, and then, the Fed's done hiking and you get this move in commodities and then people get concerned about inflation. And then, maybe gold breaks out in that type of environment. It's possible, especially if the yield curve is steepening and you get an inflationary steepening. But I'm getting ahead of myself. Let me know what you think in the comments. Thanks so much for tuning in. And hope you had a great weekend. Hope you have a great holiday coming up. And I'll see you guys again in the next video.